As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey everyone, and welcome back to listening for another deep dive on one of our stocks. And this time we're going to look at AppHarvest. They are a company that wants to revolutionize agriculture. So one of the things they say is their agriculture will use 30 times less land, which is, if a company uses less land, it's the same reason I invest in culture meat, at least one of the reasons, then I'm all for it. They're also planning to use less water, have more harvest, be more efficient, and of course have less forced labor. And they're doing this by building large, automated, robotized farms. So AppHarvest, one thing before they got listed is they made a little investor presentation. I think they were a SPAC and they did a reverse merger. And I always like to go through that, especially to see if they're actually meeting their targets. Of course, you have the market opportunity that they're explaining. So right now, 70% of certain fruits, vegetables are imported from Mexico. So the tomatoes is an important one. But also, yeah, vine crops are imported majorly. And also there's, as we will see later in this video, there is a lot of forced labor in those countries. So it's not really humane to produce them there. So the idea behind AppHarvest is to bring some of that back to the United States. And one thing that I really like to look at, I just need to find it, is the roadmap. Because usually when SPAC has a reverse merger, it has a roadmap to profitability and to see what it's going to accomplish in the next few years. And that's important. And because this was from October 2020, we're now more than 1 year further, we can also see, well, what did they deliver upon? And I'm going to come back to that when I go over the earnings presentation. But what we do see here is they plan to construct a farm in October 2022, and they have a few more farms that they plan to have finished by 2022. If that works, then they have a few more on the planning. I think 2 more in 2023 and then 3 potential more in 2024. So a total of 9 farms, although they mentioned later they might want to have 12 farms even. But the goal is, the conservative goal is 9 farms by 2025, and that's what this projection is described upon. So I'm hoping that they will meet all their targets, but so far for 2021 they have, and you will see that. I'd like to go over the last earnings report. It's already a few months old. It's namely from the end of September. I'm looking forward to seeing a new earnings report soon. Let's see, this one was in November, so I'm guessing the next one will come in February. So it's still a month away. So the first thing they say is that the net sales results were a little bit better than expected, and they're on track for the 2021 annual outlook. So it looks like they're hitting all their targets. One thing they said is that there's low market prices for tomatoes, higher distribution expense, so that means their margins are shrinking a little bit. But they did had the yearly overall yields are higher than they initially projected, so that might balance it out a bit, the price movements. That's really great. And they also say that they think there will be a rebound to pricing, so that the pricing will move back up. It might be in line with the fact that there is inflation on pretty much everything, so tomatoes are bound to follow at some point. So for the second growing season, they say they are selecting premium cocktail tomatoes, which are more expensive, so they would expect a higher profit when they grow those. I just want to say something about the price first. So I looked for the CPI data of the price, so we're seeing that tomatoes are really have been at the low point, and they made this statement in November We can see here CPI data of November. It is moving up, but we're gonna have to look forward in January for the CPI price of the tomatoes. So second thing is this news article in Los Angeles Times. US blocking tomato shipments from Mexican farms accused of abusing workers. I think this is really a good thing for AppHarvest because the Biden administration here is making a statement to Mexico, look, we don't want you to abuse workers and then sell us cheap tomatoes. That's not how it works. And I think even though like we're looking probably at like 1% or less of a tomato export to the US here that will get blocked, the statement is very, very strong. So I think that's a good start. Now let's go back to our earnings report. So what else they say? Talk about a net loss of 70.3 million for this quarter. So I'm going to go a little bit deeper into that later. But they're also on track for their 9 high-tech indoor farms by the end of 2025. They actually might complete 12 farms by the end of 2025. So they're not really sure about that. One of the farms that was due to be completed, one of the leafy green farms that was due to be completed by the end of 2022, they're postponing to 2023 because they would like to get some results from their farm, their other leafy green farm first. So that's probably a smart move. They also talk about their credit. So they have 221 million in cash on their balance sheet. And then they talk about 120 million of credit. So that's quite good. They also have, there was also a recent article where they state that this is from the 15th of December, where they basically have the right to sell and issue up to 100 million of its common stock for over 24 months. So that probably, I'm kind of extracting from the statement that they probably don't want to dilute the shareholders, but in the case that the share price would skyrocket, they might. 100 million at the current price share, it's about 26% spread over 2 years. So that's quite high. So I'm guessing they are going to probably wait for very good revenue in 2023, where they have 3 new farms opening, and then they might dilute a little bit. So I wouldn't worry about it at the current share price right now. 2 years is a long time. And they also reconfirm that here the 3 farms, it's an article from the 15th of December. So it's not like they're in trouble with delivering those 3 farms. So that's really good. Now back to the earnings report. Here they say again, they had a better start with the number 1 tomatoes, so more tomatoes, better yield than expected, 20% more to be exact. So that's fantastic, of course. And what else did I pick out for you guys? I picked out that you can subscribe to my channel and help me as a small YouTuber and make sure I can create more in-depth content like this one. Thank you so much. They also say no material issue of getting our products to our farms. Basically, it's a comment on the supply chain issues we're seeing for a lot of companies. They do say it's been a day-to-day development that they have to solve problems, but right now there is no issues with supply chain, so that's really good. Lastly, they comment on the labor shortage, and they basically say they don't really have any material issues on building a team. They had over 8,000 people to apply for jobs for them. I'm guessing it has to do with the fact, or they state it has to do with the fact they have a clear vision, it's new tech, lots of people want to work with them. So that's really positive as well. So a quick look at the financials, and one of the reasons why I decided to invest in this stock. We're actually seeing compared to the investor presentation, that AppInvest is actually making its target plans. So they're delivering on everything that they've planned. And what we're seeing here is that, yeah, of course, they expect a very negative year for 2021, like we've seen. Net income here for Q4, they expect 33 million net losses. Total year 107, but what we're seeing is the net income is rising, minus 92 million in 2022, 63 million in 2023, and they eventually become profitable in 2025, 38 million. And right now, they've been on the stock market since 2020, and we're seeing that for this year they actually managed to make all their targets, except for one farm that's postponed to 2023. So if they keep delivering, then that is great. But what I'm also seeing here is their revenue. And I think the revenue, that could spike a pretty big growth of the stock. So we're seeing here this year on track. Then in 2022, we're going to have times 4. So a 400%, well, that's a 500% growth actually. And then another 300% growth, another 200% growth, and then a 50% growth. So that's pretty amazing. These are amazing numbers. And when you're looking at how much the company is worth today, it's the stock price that's an all-time low. So it's at the company is worth 390 million, and the revenue is going to grow to 360 million. So that's pretty amazing. I hope that they really can deliver. But so far this year they delivered everything. So they came through on all their promises. The stock price is probably still finding its balance between, oh, is it risky, are they delivering? And I think 2022, when we're going to see some farms completing and when we're seeing their revenue grow further upwards, this will also have a positive effect on the stock price. But I'm not actually sure where the bottom is at. So right now we're trading at 389, and it might actually go up a little bit more or not. So we'll have to see about that.